Okay, guys, let's jump into it as we've started a little bit late. Thank you. This is our property networking clubhouse that happens every couple of weeks. We've been having a string of interviews and in fact, 3 of those people are here. But what I really wanted to do is get back into a bit of networking, and we are looking today. So I've put the link in the top of this, which is a link, and it goes to Brickflow. Paul, I can't see you on the Zoom, by the way. I'm sure he'll come back. But Brickflow, there is a I don't know if anyone uses Brickflow. Do pop a note in the chat if you use Brickflow. It's an incredibly useful tool to help you size up big projects, and also associate it to funding those projects, development projects. So it's pretty useful, but it's just brought out some industry insights for February 2023. And what I really wanted to highlight here is where we all get our data from, where we all get our information from, to make informed decisions, informed judgments as to how we are going to move forward in our businesses, in our property businesses, and taking it forward from there. So does that mean nobody uses Brickflow? That can't be true. I've seen a few of you in the audience who definitely use Brickflow. So everyone's being a bit quiet this morning. But yeah, so let's just introduce ourselves quickly. I'm Emma Howitt. I run a company called Pure Abodes Property. I started off with rent-to-rent serviced accommodation 4 years ago, and then last year developed, got a purchase lease option and developed an old Victorian building into currently a 16-bedroom apart hotel, which is up and running, and it's very exciting. And we're prepping massively, because we are a fairly seasonal market. We're prepping massively for the summer intake, which is about to open in the next couple of weeks. So that's me. So I'll go around the room. Paul, do you mind introducing yourself? And then we'll just go around the room. And obviously, guys, if anyone wants to come and join us and join in the chat, please do. This is open networking.
I'm Paul Merrick. Been in business for 45 years. Started my first business when I was 15, just in case you're trying to work out the maths. And I have been in property for 3 decades now as a developer of both residential and commercial properties. Also been a consultant for major PLCs as well as some regeneration agencies. In the process at the moment of selling up my debt-free portfolio of properties that were built up over 3 decades, as I move to being an angel investor and venture capitalist and spend more time as a business consultant.
Amazing. Okay, next up, Hamish. You're not leaving you till last, Wendy, but it's just the order I can see you in.
Hi, I'm Hamish. I'm doing, well, at the moment I'm doing some developments and some rent-to-SAs. So I've just actually opened up my first rent-to-SA in Coventry area. And I took a 2-month booking as of Friday. So happy days for that. Now the idea is to systemize and scale quite nicely. But I'm largely working in the Oxford area, where I have a development project going. Actually, this one is a short lease, which is going to be extended by 90 years. We had the bridging finance valuation come back, which was at the higher end of our expectations. So it's been a good news week for me.
Fantastic, love that. And last but not least, Wendy.
Yeah, saving the best to last. So I've been in property for about 5 years now, developing some buy-to-lets and serviced accommodation, and we're in the process of buying a property to turn into a 15-bed apart hotel. So looking forward to that.
Amazing. So guys, we'll just jump straight into it. And today is really about finding you know, kind of the information out there and where we find our information from, and to where we feel we're at personally in our journey and how we're feeling about sort of the property market, etc. So yeah, so I suppose I'll jump in. I know that in this article it basically cites from Brickflow, the industry insights for February. It cites that we have just basically, even though we had 2 quarters of reducing our our economy, that due to some surges in February, that we are just avoiding a recession. I know there was a lot of highly respected people at the beginning of this year who were really saying that we were going to have massive drop, you know, in house prices, and how, you know, things were going to be extremely tough. I kind of felt that there may be an adjustment, but I really felt that considering there is so much demand and such a lack of properties for rental and for you know, for purchasing, that, you know, I felt a correction might be right, but not this kind of touting that it might be 40% drop, 50% drop. And I think that is now starting to sort of be reflected. I don't know. That's kind of where I'm at. How does everyone else feel about it?
Well, I think it is very much a microclimate, and it does depend on how you look at it. So I have spoken to vendors who are selling their properties, who had offers last year which were massively in excess of market value. That then fell through more recently, and they are having these big drops of 15 to 20%. However, I feel that that's because the prices last year had been overinflated rather than it actually being a drop in this situation right now. If you look at the valuations that I've been looking at, and the ones that I'm hearing through from Rick surveyors, to me seem that there is a correction, but I wouldn't say any of this massive high scale drops that some people would predict.
I can't help but agree with that. Just to bring your attention, in Clubhouse, Ingrid is trying to join us. I don't know how that works in terms of this thing.
Yeah, absolutely. I will sort that out. Thank you for raising it for me. Oh, she's up here anyway. There we go.
Right. Okay. I think Hamish makes a good point, which is, where are you taking your bar from? So if you're taking your bar from Rick's valuations, then probably we're not going to see a 40% drop from Rick's valuations. But what you've got to remember is that at the height of the market, that people were paying 20, 25, 30% above Rick's valuations. So actually, if you take a 30% above Rick's valuation, which was the actual value of the property, and then you see a 10% drop below Rick's valuations, then you've got a 40% drop. So it's all about how you're defining that market. Are we going to see a 40% drop this year from Rick's valuations? I doubt that very much. Is there a bigger drop to come? Now, that's a very different question, madam.
In Fife in Scotland, where I'm based, where we've been talking to agents about properties, there seems to be less people looking at properties, but the prices, they're still going for over the asking price, so people are still prepared to pay more. So they're not, the agents aren't necessarily seeing a drop in what people are paying.
Yeah, interesting. I think for me,
so which part did you say Fife in Scotland? Which part of Fife is that? I take it that's places like St Andrews rather than places like Leven.
Glenrothes, actually, that's where we've been looking more recently. Yeah,
the centre of the universe, Glenrothes.
Absolutely.
I love it. So it is really, I mean, to me, it's so key, isn't it? Because you've got so many people that are being, you know, terrified, and being told that, you know, the cost of everything is crazy, and yes, there certainly is some definite changes in that, but I know personally my electric bills have massively reduced, that's just my home, that's just me. Maybe I'm a savvy purchaser, but I think in the news there is just so much fear mongering, as there always is. And in fact, funnily enough, I was listening to a podcast, and I listened to sort of 2 or 3 consecutive years, and they were literally podcasts a year apart. And each of them, every single one of them said, in our economic crisis that we're experiencing at the moment. And one was like 2018, 2019, then it went obviously into 2020, 2021, and then it was 2023. And all of them cited our economic crisis that we're having right now. And I think that's what I feel a bit sad, that we are now led, and there's so many people that have come to accept what is said in the news, what is said constantly, and it's almost like it's to be constantly in this fear, I just think is, personally, from a moral standpoint, not very good. So that's where I don't know everything at all, and I'm not experienced like Paul, and all of us have got our own experiences. But what I'm looking for is finding places where you can actually look at the facts. So, for instance, I'm also got here the Office for National Statistics, and they come out kind of a month or so a bit later. But this is the December 22 one. And you look at since 2005, housings have gone like that. You might have the odd blip, and that's fine. But exactly as Paul's spoken about, when you're looking at, last year, let's say your property went up, 14%. If this year it's dropping by 14% or 20%, it's actually only going to be a 5% drop over a 12 to 14 month period. So so it's sort of interesting where we get it from. I mean, where do you guys usually look for your information?
I think you've got to be very careful where you look for information. I remember during lockdown 2020, and there was Savills, one of the chaps in Savills, who was predicting this great drop in prices because of COVID. And I was recording a podcast at the time, strangely enough, that people can go back and listen to, called Property Development Live, because me and my wife were locked in the house and we had nothing better to do with our time. So we decided we did about 20 podcasts until we were let back out again. And I predicted actually that prices weren't going to drop at all, and that there might actually be an increase because there was pent-up demand. And once we were let back out again, people would buy. I predicted boats, houses and cars, all the big things that you couldn't buy when you were sitting at home off of Amazon, right? And somebody commented that was doing the podcast with me, but Savills are saying, that there's going to be this huge drop. And I said, yeah, let me take you to an article from 2007 when this same chap from Savills said that prices were just going to increase by roughly 20% in 2008. Which, if anybody remembers 2007 and 2008, that isn't quite what happened, right? And the market didn't quite go in the way that they predicted that it was going to go. So I think you've got to be very careful. But I have a bigger question, Emma. Right, and this is a much more important question. What difference does it make? You see, I've been in this job for 30 years now, right? Nearly as long as you guys have been born, obviously, by looking at you. And
will get you everywhere.
Yes, indeed. It usually does. And honestly gets me a few places as well. And so we've lived through 2 crashes, if you like, one in the 90s and one in 2007. And here's a surprising thing: I made more money in 2008, 2009, and 2010 in property than I did in 2004, 2005, and 2006, which was supposedly the boom years. So my view, and incidentally the same was true in the 90s. I made more money in the 90s than I did in the boom periods in between. My view is people who make money in property in the boom years can't make money in property. What they do is rely on the market making them money.
Yeah. No,
they don't make any money. They rely on the market making them money. Actually, your test of your fibre, if you like, the test of your business acumen, the test of your ability really comes if you can make money when nobody else is. And one of the things I'm proud of is we kept developing through 2008, 2009 and 2010, and we were still selling developments when there was no liquidity in the market.
Yeah, I mean, I think, you know, when you say the question, which is what does it matter? I mean, that's where, for me, I've really needed to be educated. I really knew nothing about property before I kind of came into this space. All I knew that you saved up for a deposit, and then, you know, bought a property and then saved again. I didn't really, you know, I didn't know any more than that. But now that I kind of understand it, and it's different inherently, as long as you do your due diligence, whether it's kind of a big project or a small project, there are certain places where you can make your money. So if you're buying it already below market value, for instance, for whatever reason, whether it's a probate or you know, a quick sale or whatever, if you're able to then add value when you own it, and then if you're able to, you know, increase it, whether you sell it or whether you utilize it for, you know, let's say with us, with a hotel as serviced accommodation to gain more out of it. And then along the way, you ensure that the lending that you have on it takes into consideration high and low mortgage rates. I mean, you know, I remember when I was growing up that, you know, mortgage rates were really high. They were kind of the equivalent of what is a credit cards now. And we're all very shocked about that because we've had so many years of cheap borrowing. But inherently, if you do your due diligence, I mean, I'm still shocked. I was just chatting to somebody the other day and they were saying, oh yeah, my flat now, I'm having to pay, you know, now going back into it because the rent is not enough to cover it. And I was thinking, gosh, you know, that's a really scary position to be in. But inherently, if you don't know these things, you know, going back to that old model of just saving up, buying something and not really taking much else into consideration is going to be a real worry, isn't it? So I suppose it's kind of really understanding and ensuring that whatever you're doing, there's never a bad time to buy property. It's just making sure that the properties that you are buying are sort of relevant and will always, you know, come out in the end. I mean, obviously you can make some really poor decisions and after 10 years, generally that property is going to be worth more. So it's potentially better than, say, stocks and shares. But yeah.
Yeah, so I mean, I had the lesson about the interest rates a few years back when I bought my second property. And I was buying from living in Tanzania, where I was working at the time. So I was buying as an expat, and I had the first property I had an interest rate of about 1.5%, I think it was. And then all of a sudden, buying as an expat from an African country, the best I could get was about 5.8%, which was a massive difference to me at the time. And I didn't know what was going on. When they told me how much I was going to be paying, I assumed that was a repayment mortgage, which was what I had been on before. And all of a sudden I'm paying more, but it's interest only on that. So that became a really big learning curve for me. As the next 2 years, I didn't have anywhere near the cash flow that I had expected from it. And so now we're in similar times where that's the sort of interest rate that we're expecting. But I learned my lesson some years ago, and actually I'm prepared for it, and it's not so bad. But as you say, it's all about getting educated and learning how to adapt to the market. There are some people that say buy-to-let is dead now, but you can do buy-to-let and perhaps put in a tenant buyer. Therefore, you're helping someone get onto the property market, whilst also making extra on top of the rental income. So there are different strategies that you can use to still profit. But again, in the long term, we're expecting the market. It may correct, it may dip, but over the long period, we would expect it to carry on up again. And property's not a short game. We want to look at it in the long term. Any investment strategy is better in the long term.
I would love to share my experience. I had conversation with one millionaire who was explaining for me how he was dealing from all these recessions, and everything what he told, that you have to look to buy property where you can do uplift after you're going to do something or not, around to achieve 15% yield. And he was told, when you're achieving 15% of yield and paying remortgage for a couple of years, in all these recessions, they are coming in waves, one finishing when everything is fine and another starting. And usually we're telling about 8-10 years gap. So if you're buying something, achieving after, let's assume, development, 15% yield, which is not very difficult to achieve if you're running a service accommodation, and doing remortgage, the next prices will come, you would be more safe, because if your mortgage will go up, you will be repaid a lot. So it wouldn't be so painful as for some are at the moment. For example, I know a lady, she bought flat in Hull for 130K. Now she's struggling to sell it for 85. No one is buying. And it's 2-bedroom flat in good location, and it's nothing wrong with that flat. So again, I believe everything about numbers, due diligence, learning, mindset, and experience, and everything sort of needs to be happen, and we would be safe.
I do think
part of the problem is, though, that too many people, I'm going to pick up on the phrase that Hamish used. Too many people come into property, which is a business, and view it as an investment. And that's part of the problem, that they're not viewing it as a business. I mean, very few businesses could actually survive on a 15% profit margin. And that's why a lot of people really struggle, because they're not viewing property when they come into it as a business. They're viewing it as an investment, a place to park money. And obviously, that's okay if you've got lots of money to park money in property. But a lot of people are parking other people's money in property. In other words, they're borrowing the money to park in property. And they can't control any of the factors. So they can't control how much that money is going to cost them over a long period of time. They can't control where the price of the property is going to be over the long term. And any business that you're in, the more control that you have over the outside factors, the more successful your business is. And I think the problem is that most people aren't coming into it as a business. And it might be worth at this point kind of talking about some of the business models that we have used. I've got 11 business models in front of me here. I just pulled it up on my screen that I was talking on Clubhouse the other day there. And to just give you an indication when you treat property as a business and not as an investment. So if you're okay with it, Emma, I'll go through those.
Yeah, that would be great.
So here's just 11 of the kind of business models that we have used over the last 3 decades. So I went into detail in one of my own Clubhouse rooms, and if you click my face, as they say, on Clubhouse and have a wee look, you'll find it. I think it was last Sunday's room, and it was residential caravan park. So we've built residential caravan park, 6 of them to be precise. 64% return, and we also get the sales of the residential caravan park caravans as well. So that's a reasonable return. So you've got 64% return on rental, and then you've got also the sales with roughly a 50,000 margin in each one of the park homes. We've bought commercial property and rented it back. It's very difficult to buy a residential property in this country and buy it back, rent it back, because it's controlled by the FCA. And you have to be registered to do so. But commercial property you can buy and rent back. And I was looking at the last one of those that we did, and that was a 200% return. We looked at advertising hoardings. We were quite involved in advertising hoardings. That was a 250% return on what was essentially a rent-to-rent kind of model. Commercial rent-to-rent, the current one of those that we've got, last one in our portfolio as we sell up, because these have been quite popular when we sell them up. And the reason for that is this one's got a 400% return. Following politics, not prices, which I've discussed with you before, Emma. We've 10x'd on that lots of times. buying directly from administrators instead of buying on the open market. I've got one of those at the moment. It's got an £800,000 profit margin in it with £164,000 in it. Buying liabilities as opposed to assets, which is one that always confuses people. Borrowing commercially in terms of getting venture capital into your business, which makes a huge difference, not only from a monetary point of view, but also from the expertise that comes with it as well. And grant funding. I done a whole room on grant funding as well, if somebody wants to click my face again and have a wee look at that. One I was talking about has a 50% return on it, and we sold it for 6 times what we paid for it. Working with local authorities, that's been very profitable with us. And I suppose the most valuable business model in my business has been building relationships with the people that matter.
Awesome.
Yeah, no, absolutely. I mean, the property is a very social business, and you know, connecting with other people, doing joint ventures, and you know, just working closely together. You know, is crucial in it as well.
I think the key is being flexible as well. It's kind of, you know, listening to Paul and the various opportunities that there are within property, is being prepared to change and you know, do something so that you are always looking at profitable projects. I think one of the biggest challenges I'm having at the moment, and going back to your chat about the energy prices and all the scaremongering that's going on, the problem with that, you know, my personal experience of energy prices is they haven't risen a huge amount, they've gone up a bit. However, when we're looking at commercial projects, so the apart hotel, one example is that the lenders are cautious, and they're really, when you're estimating your kind of running costs, they're wanting you to increase that hugely to take into account the fact that energy prices may increase. So I'm finding it challenging. You know, they're reducing their loan to values because of all of this. You know, and commercial products are a lot harder to get hold of, especially in Scotland, especially in rural Scotland, blah, blah, blah. And so the commercial side doesn't seem to be following the residential side. So if you're buying buy-to-lets, residential properties, it seems to be easier. There's more products available, much more challenging when you're coming into commercial, and more so in the last couple of years.
Can I ask a question on that? Because I don't do apart hotels. I don't do service accommodation at all. But the thing that always strikes me is, you know, somebody who's been in business for 45 years and relatively good at what I do. Why are you guys not looking at venture capital? Why are you looking at bricks and mortar lending as opposed to venture capital into the business?
I think it's knowledge of people in that. It's access to the contacts and building up the knowledge and expertise in that area to attract venture capitalists. Certainly not averse to it. It's just, I suppose, early in the journey and building up that experience so that, you know, we're in a position that we can attract that type of funding.
I just find this interesting, and it's maybe a topic. Tell me if we're going off topic, Emma, and I'll shut up. But it's interesting because I work as a business consultant, and one of the businesses I'm working with at the moment isn't property related. In fact, it's got less security than property related, but it is leisure related. And we're talking to 4 venture capitalists at the moment, and we're arguing about the amount of the business we want to give them, and we're arguing about the amount of money that we want to give them. But we're not finding it difficult to find venture capitalists to get involved in the leisure industry, because the leisure industry is growing. I mean, it's been growing. I could bore you with statistics about the leisure industry, of which apart hotels are part of. And what I find interesting about, I'm going to use this phrase and don't take it the wrong way, use guys, right, is you only ever think about bricks and mortar borrowing, and you don't think. And actually, you know, having built a reasonable size business, and I talk about this quite a lot, and we're rapidly ignored, but it's quite interesting. I didn't bring venture capital in our business in the early days because I needed their money. What I needed was their expertise. What I needed was somebody who was going to take a £40,000 business and turn it into a £5 million or £10 million business. Mm-hmm. and he's just kind of, it's almost ignored by the property world venture capital. And I don't understand why. And when you look at where used guys particularly operate, which is a sector of property that's really leisure industry, I have no idea why you're still trying to borrow out property to property. It just it seems naive.
I think for me, so the apart hotel will be my first venture into this kind of type. I've absolutely got ambitions to grow that from 1 to 20, and so I know that doing what we're doing just now, going from bank to bank, isn't going to take us to that 10 million. So I'm absolutely open to kind of looking at different ways of funding that. And I guess it's a knowledge gap, isn't it? And, you know, it's looking to people with your experience to kind of understand how you present yourself to attract venture capitalists going forward.
Yeah, absolutely. And I have to say, going on to a previous conversation we've had together, Paul, about the creating your business plan and things like that. So I am working through your book at the moment. You know, slowly but surely as I get time in between other tasks. And you know, I find it quite inspiring, the idea of approaching the venture capitalists. It's something that down the line I'd certainly hope to proceed with. But at the moment, I think it's more about building that business plan, making sure you've got the research in there, the market research, knowing your client base fully and strongly, so that when you can, you've got your plan put together in detail, then you can actually approach them, and you have all of that information there. But then it's the next step of how do you approach the venture capitalists? You know, where do you find them? Something that I'm not strictly familiar with myself. So, you know, once I've gone through your book fully, maybe I'll approach you.
It's a little bit of work, isn't it, Hamish? It makes you think. It's a thinking book, right? It's a grown-up thinking book. Although Margaret Ann did write it in a way that I think it's very accessible. Because it's not the way we speak to each other, so we made it very accessible. I think people. It's quite interesting, you know, when you look at venture capital and you look at venture capital in the IT world, right? And in the IT world, we have this thing called runway money, right? Which is, and we're looking at runway money for these guys as well as a consultant. And I think the other perception that people have in property is, well, I have to prove myself first, so I have to build the first one and prove myself, right? Yeah. You know, and if you take that into the IT world, right, and how many IT concepts that we are using, like the one that we are using right now that had millions and millions of dollars thrown into it, and do you know how much profit this makes at the moment? This Clubhouse thing that we're on, do you know how much profit it makes? Absolutely not.
Zero. Yeah.
Right. And you guys think that you have to proof of concept. This leisure company that I'm working with have got, let me think, absolutely nothing. Mm-hmm. And I can't, obviously, they're a client and I can't share too much detail as you would understand, right? But let me say that we've been offered a substantial 7 figures to kick this business off from a concept, Hamish.
Yeah. Well, it's interesting though. I mean, like, I think the idea of 7 figures would probably, you know, if I put together a concept, 7 figures, I would be quite nervous taking that forward. If someone said, all right, here's you know, 10 million, take it forward, I'd be quite nervous about my ability to manage a project so big.
I wouldn't.
No, not would I. Why would you manage it, Hamish? You would bring someone in to manage it.
Yeah, I mean, for me, it's interesting what you say there, Paul, is that I kind of very much felt that it was the chicken and egg approach. I didn't have enough experience to go and tout for that. And certainly when looking at exits, initially, very early on, we were looking at sort of exiting through pensions, but because ours are self-contained units, it doesn't work. So then we've been looking at sort of REITs. So I've been looking at it from the other end. And I think you're absolutely right, looking at it from this end, because certainly our model and in our local area, you know, there's masses of demand, and certainly I think the whole leisure industry is incredibly exciting. You know, the number of people that are falling in that you know, middle middle class kind of area, that have got more funds to be able to go and do you know, sort of the leisure activities that used to just be for the more wealthier or the more wealthy. So yeah, so I suppose for me it was very much, yeah, I sat in the chicken and egg space, and I suppose I came from a position where I wasn't thinking big enough, maybe. But that's very, very kind of inspiring, so to speak.
Well, venture capitalists are very interested in leisure at the moment because, you know, venture capitalists tend to be, because they've got millions of pounds to spend, tend to be relatively smart people in my experience. I've never met a dumb venture capitalist yet, right? I'm moving to being a venture capitalist when we sell off our portfolio, and I think I'm going to be the dumbest venture capitalist I've ever met.
No, you're not.
And they're usually relatively smart people, right? And they're looking heavily at the leisure industry because they realise that the next generation, if you like, the kind of, you know, the 40s and unders really value their spare time. And they're maybe not as worried about having a big house anymore or having a big car as they are of actually spending quality time. So they're saying, yeah, I don't need the like people from my generation, because I'm old, but people from my generation wanted the big house and wanted the big car. And actually, when you talk to the under 40s, they see that as something they will do sometime, but right now they want to live.
But I suppose it is, isn't it? To me, it's very much kind of, you know, a gap in knowledge, not understanding how to broach those. I know for many years now, I have you know, an ideal investor, and that ideal investor is somebody who's you know, who's had maybe some successful businesses, who generally has a very broad portfolio of, you know, properties, you know, maybe stocks and shares. They've you know, built up businesses. They either may still own it, but they're not really part of it, or they've sold it. So they're very experienced people, wanting to kind of have a bit of a, you know, a time of helping others, obviously maximize, you know, their return. But I'd never really thought of it from the venture capitalist point, where it, you know, it could be a, you know, a no money return for a long time. That was just not the sort of model that I felt that I wanted to be in. I wanted to be in a model not like Clubhouse. I didn't want to be in a Clubhouse model where there is a certain amount of hope in there. I wanted to be in a model where it came from a position of certainty. And in fact, that goes back to the point that Ingrid made, you know, not rely, you know, if you're not getting the right returns on a buy to let, then moving it to SA, that's not a model I would choose. To me, your backstop always has to be that it would work as a buy to let, no matter the sort of mortgage rates that we're getting to. So I suppose I was thinking of it from a it has to work perspective, whereas with a VC it's more, you know, absolutely you're going to do a lot of work and effort, but they don't always work, do they?
I find the buy-to-let to serviced accommodation an interesting one. I always have a very pertinent question when people talk about, I'm going to change my buy-to-let to a serviced accommodation. Why? Because it's not working as a buy-to-let. So why did you have a bad business model in the first place that you have to fix? Yeah. I don't understand that. You had a business model that was broke, so you haven't to fix it. Why didn't you just build a good business model in the first place? But that does. Emma, you're getting me onto one of my pet subjects now. I'm gonna kind of get upset now a bit, but that brings me into one of my pet subjects, to be honest with you, which is the whole kind of property industry. And who we look to in the property industry, or who most people look to in the property industry. So we're looking to these gurus who are trainers, right? And who are mentors, right? And actually, you know, as a guy who's been a business consultant for 20 years and who was smart enough, incidentally, to bring business consultants into my business, which helped turn it into a business, right? I think maybe we're looking in the wrong direction to the wrong people.
Yeah,
We are
absolutely.
here.
I think
all fine. We have so much experience from what you are sharing, and especially in your book. So if anyone could take at least 5-10% and listen and move to that, everyone would be more profitable and more valuable with their property journey. This is just my opinion.
Sorry, Wendy, you were just about to say something.
I don't think it's me, Ingrid. I think it's thinking of your property business as what it is, which is a business, and tackling it like it's a business. And if you're looking for outside help, you look for outside help where a business would look for outside help. So you stop putting the gurus on some pedestal and you actually look for people who know about business, because what you're in is business. So sorry, I told you I was going off on a rant. I'll stop.
So Paul likes to, yeah, I mean, talking to those of us in the room who are property mentors and property, not I wouldn't call myself a big guru, but I totally agree. I think the whole, in fact, funnily enough, I was on a business course last week, with a chap, Paul Avins, who I hugely admire. I mean, inherently things do have to work, but you still can have the different business models. So if we're going back to Robert Kiyosaki, who, by the way, every year touts that there's going to be a massive crash, and like all these people, if you say it for long enough, you'll be right in the end. But one of his models is, he has the model where it's the quadrants, and you start off as an employee, a solo, and then you work, you run your own solopreneur, so to speak, your own business. Then you become you don't necessarily follow this, but then there's entrepreneur, and then there's investors, and they each pop in their separate positions. And you don't necessarily have to be a very successful business person to have a successful investment. You don't have to be now a entrepreneur to have a successful business. When you look at things like Amazon businesses, you can have a very simple concept. Now, again, we could argue with that, Paul. I know that you can argue, well, that might not be a long-term thing, but you could still have certainly a successful business, and you can be an entrepreneur and never get above a certain area because you haven't had the right training or whatever, but you can still have investments that do work that isn't necessarily a business. So I think it sort of falls into different areas. I think everyone looks at it from a different perspective, and I totally sort of agree. But I'm going to kind of try and rein it back a little bit, if I may, going back to what we came to talk about.
But can I just pick up on that?
Yeah.
Because I run a room on Saturday morning. Again, click on my face on Clubhouse, and I run the room on Saturday morning, which is something I learned about a long time ago and made a big difference to my business, which is being at the wrong level of right, which is what I call the room, being at the wrong level of right. Meaning that you've got a business that's making some money, right? So you're not wrong, because if you've got a business that's making no money, then you're wrong. It's a bad business, right? But you've got a business that makes some money, right? And then you get comfortable with that. And that's the wrong level of right. So you're not wrong, you're just not at the right level of right. And have I reached the right level of right yet? No, I don't think there's a pinnacle to the right level of right in business. It's like a mountain you never stop climbing. But
yeah.
Can you get a few feet higher? Yeah, you certainly can.
And I think that goes with life. That's just like a law of living, isn't it? Unless you're growing, you're dying. So unless you're moving forward, unless you're wanting to keep going, you're gonna. That's to me that's a natural law of being as well. So yeah.
I think it comes down to mindset as well, doesn't it? And knowing where you want to be and why you want to be there. And then it's about surrounding yourself with people who are already there so you can get there. And I think in property, a lot of people think small, which is why they stick to the buy-to-lets. It's and a lot of the teachings are all around that level. And I think if you want to go to the next level, it's then about surrounding yourself with people like Paul who have been there and done it, and can take you to kind of where you want to go with your business, but you've got to know where that is first. And have that ambition.
I've got one rule in life, which is I like to be the dumbest and the poorest person in the room. Some people say I don't have to stretch that far to do either, but I like to be the dumbest and the poorest person in the room. And I'm part of an investment network as an angel investor with some proper, proper people, grown-ups. I always call them grown-ups when I go in the room. The grown-ups are here now. And there's one guy who sold his business for 200 million. I kind of figure that makes him 200 million times smarter than me, basically.
Wow.
Right? And I know every time that these guys open their mouth, I usually have something to say. You probably know that, Emma, right? And it's strange, when I go into these rooms, I just sit there and be quiet on the principle that if I sit and be quiet, people might think I'm stupid, but if I open my mouth, they know I am.
Oh, I really like that. I really like that. Oh, absolutely. Well, Paul, my goodness, if you feel that you're the stupidest person in the room, I better watch out. But again, that is, and all of these are life learnings, life journeys. I do feel that you are definitely, having known you, I think you're some of the time an unconscious competent. I think there are things that you naturally do that some of us are not as fortunate to have, and I would put myself in that. I think I'm a conscious incompetent a lot of the time, moving towards becoming a conscious competent. But I think, when I look, and certainly from a mindset perspective, and I look at a lot of successful people, they don't realize why they are successful or why they've come there, and they will demeanor themselves, perhaps even like yourself. And they say, I'm not this and I'm not that and I'm not the other. But actually, when you compare that and you look at the things that make people successful, there will be a lot of things that you naturally do unconsciously that makes you successful, where there would be a lot of other people that have really tried and done a lot of things, but haven't necessarily surrounded themselves or naturally done things to enable them. And it's potentially a bit more of a hard slog for them. They may have to take different routes. It may take them longer. And hence why, for a lot of people, success doesn't come until they are much, much older, because they've gone through those rigmaroles. They've learnt the hard way. They've got those life knocks. And for some, that stops them. But for the few that keep going on, keep going up that mountain and sliding back down and getting knocked out and getting back up and doing those things, that's what gets them forward. So I think you demeaning yourself as much as it's a fun joke, I do believe, and you mentioned this, I think it was only the last time we met, and you sort of said, yes, it is becoming more obvious that other people don't see that as a natural thing. There's so many things that you do, and I see it so clearly, that you don't realize that you do, that are really, really fantastic for becoming successful. So yeah, I think you're in an amazing position, and gosh, I would love to be a small puppy in your man bag listening to these conversations where you feel that you're not able to join in.
I genuinely do. I mean, a lot of people say it, they just don't. A lot of people talk the talk, but they don't walk the walk. I genuinely love being the stupidest person in the room. I actively go and try and be the stupidest person in the room. And thank you for all the compliments, but given the type of people I've spent time with, it's not difficult for me to feel stupid among these people. Honestly.
And how do you, because this is an interesting one, and now we're going completely off topic, but let's just keep going with it. How do you find them? Because it's certainly something that I'm pushing myself, and I feel really fortunate. There's a number of groups where they're far ahead of me, but also sometimes it is more challenging to find those groups of people. So where would perhaps where would you go searching for those people that you might be able to be accepted by?
Well, I think I've said to you before, I kind of started my journey by buying an old £5,000 Rolls Royce and joined the new Rolls Royce Owners Club. And lots of people who own Rolls Royces are quite smart. So I joined the Rolls. I bought a £5,000 Rolls Royce, which I just sold last year for £15,000 incidentally. But I joined the Rolls Royce Owners Club. I'm very privileged. I've been a professional speaker for 12 years, and I speak at a lot of business conferences and some property events as well, but more at business front. And when you speak, And I'm quite a low-level speaker. You know, very, very rarely am I the keynote speaker at events that I go to. In fact, I don't want, when I'm offered a keynote speaking spot, I think, God, I'm the smartest person in that room. I don't want to be there. I want the running up spot. I want the introduction spot. I want to be the guy who gets the opportunity to meet the keynote speaker in the green room. Right, and if I'm asked to be the keynote speaker, I don't want to go there. It's a club I don't want to join. So being a professional speaker and going to these events has helped a great deal, because not only am I in the event, but even if I'm only speaking for 20 minutes, which takes me that to say hello, let's be honest. So I'm very rarely speaking for 20 minutes. It takes me 15 of those to say hello. But being on a stage with some of the names that you guys would instantly recognise from the business world, where they're being the keynote speaker, but you're in the green room with them, and just the opportunity to do that, and then if you can carry that relationship on and find out what groups they're involved in and where they are, that's fantastic. But sometimes, being in, I mean, I don't want to name drop, but sometimes being in that green room for half an hour with those people, I kind of sit there and think, I've learnt more in half an hour from a name that you would instantly recognise, right, than I think I've learnt in the rest of my business career.
Wow. And how did you get into the speaking then?
I never stopped talking. It was easy.
We hadn't noticed.
I've always, well, I'm a dyslexic, so I was never going to make my way writing in the world. So I kind of, I went to Toastmasters many years ago, stood at my first Toastmasters event, petrified to say hello, moved from there to Professional Speaker Club, moved from there to getting professional gigs, and then became a professional speaker. And what I actually discovered about it was I loved the speaking. Outrageous amounts of money you can get paid for speaking, incidentally. You know, on some of these gigs that I'm talking about, the guys that are there are getting £50,000 and £60,000 for a 1 hour speech. And as a run-up act, right, as a warm-up act, I'll get maybe 1,500 quid for 45 minutes, right? And I hope one day to kind of earn the real money, but I don't think that's ever going to happen. I think I'm going to run out of age before that happens. What I discovered very quickly was I originally wanted to get into speaking because I had a message I wanted to share and I wanted to get paid for it. And what I actually discovered was I just like going to these events now and just being part of the event, because you're kind of behind the scenes instead of in front of the scenes. You know, you're not waving at the man from the audience, you're actually sharing a coffee with them. And I've been very privileged, some of the people I've managed to get around. And I can be a bit, what's the appropriate phrase here? Pushy. I can be a bit, I know you're shocked, Emma, but I can be a little bit of kind of like, right, okay, you're a genius, I'm a fool. How do I spend some time around a genius? And they always go, no, I'm not a genius. And I go, no, you are. So how do I spend some time around? What club do I join? Where do I go? How do I, what do I do? Right, well, this is my golf club. Why don't you join that? Okay, then I can't play golf, but I'm there. I'll be your caddy. Right? I'm going to make a very, can I make a very serious point before we close about this? Very serious. This is my serious voice. I'm being grown up now. Right? Lots of people, when they find themselves in a room with people much cleverer than them, rather than staying there, get intimidated and feel less than and leave. Right? And if you genuinely are in a room with people who are much more smarter than you, much more capable than you, and can use English better than I just did, then I would suggest that you don't get fearful and run away, that you stay and you listen. But for a lot of people, their ego gets in the way. For a lot of people, they can't stay in that room because they just feel lesser than. And if you can stay in that room for a little bit longer and put your ego to one side and put your ears to the front and your ego to the back, makes a big, big difference.
Wow, that's fair. Some very, very wise words. Thank you. Thanks for that, Paul. Well, that, as always, we went in a completely tangent to what we were originally going on, but I think it was really, really valuable. But I do just want to go around the room, because we did start off by, talking about how we felt about the sort of property market and how that might go for the year. So if I could just have a bit of a roundup, and Wendy, I'm going to start with you this time, if that's okay. How are you feeling about investing this year? Are you excited, or are you really being affected by the news, etc.?
Yeah. So I think so. I've learned a couple of things. One is don't go for complicated projects at times like this. Find the simple stuff that makes money. And if lenders are continuing to put you through the ringer like they are right now, then it's going to be very painful to grow a business. So having met Paul and listened to what he's talked about, I know now that there are other ways that you can raise money, big money, to grow your business to a decent size. And so I think that's been an eye-opener. And I think it's if you want to expand your horizon, go find people that have already done it and learn what they did.
Amazing. Yeah, that's really powerful, Wendy. And in fact, I think I might go next because it's kind of similar to me. Yeah. I'm looking at by constantly going for these bigger projects, they can take so long. And as you know, and I've had a couple that have fallen out of bed right at the very end. So I'm looking at that balance of having some of the more simpler, quicker turnaround projects that are make very good return, interspersed with the bigger ones, and then you're keeping going. So that's a really interesting one. And I for one, I think it doesn't necessarily matter so much where the market is, as long as the deals are appropriate and you've done very good due diligence so that they do work. Going back to Paul's point of making sure that it wasn't a poor business model, and you don't have to do service accommodation because it doesn't work. And I certainly feel very uncomfortable to be buying somewhere and it not to work as a buy to let at a higher interest rate, because that's a worrying place to be. Hamish, you next, if you don't mind.
Well, in terms of the fear mongering and things like that, I'd like to say I have very much limited my standard media sort of take on the world. I don't tend to read into it too much. I've stopped watching as much of the news as I did. I'm focusing largely on the stuff that's important to me, rather than how many people are being killed in which part of the world, from what situation, and the fear mongering that goes with that. I find that within the property industry, I prefer to get my news from the people who've got their finger on the pulse, from other investors, from mortgage lenders and brokers, and tax advisors and things like that. And I find that when it gets into the general media, they've just gone for a sensationalist report rather than actually going with what we should really expect. So yeah, I limit my my media sort of impression on that, and going forward for projects, as long as you do your due diligence and make sure that it's cash flowing in the short term, and then it doesn't matter what happens with the market, whether it goes up or it goes down. Eventually it will go up, because we're a small island and demand outstrips supply. I still feel very confident. And actually, I feel that it's in many ways it's easier this year than it was last year, because prices were going up so much. It was everyone would just outbid you last year, and to a way where the numbers won't work. This year, every time I look at a deal, I can find numbers that work. And I think that for us as investors and developers, if you view it, as Paul so rightly says, as a business, that sets you apart and from so many other people who are just casual investors. So I think there's massive opportunity for us going forward if you keep it professional and work it as a proper business.
Fantastic. And Paul, a brief close, if I may ask for one.
Yeah, I'll give you a soundbite, madam. How about that? A soundbite, right? Stephen Covey, 7 Habits of Highly Effective People. Start with the end in mind. Here's a soundbite for you people. stop worrying about developing a property and start worrying about developing a business.
Yeah, I absolutely love that. Thank you. Well, look, thanks everyone for joining in with us today. And yeah, just a couple of comments that we've had coming in here. So Leonie has said, let's enjoy this time building memories and having experiences, as well as building a profitable business. And Abby has said, amazing advice, Paul. So thank you so much to everyone who's joined us today. Do remember that we are here every week in the term times, and next week I'm really excited to have Jason Patterson, who I think I did see him briefly. Is he still in here? Yeah, Jason, who will be talking about short leases. So yeah, Hamish, that's one for us definitely. And yeah, so he'll be
self-claimed king of short leases, Jason. The self-claimed king.
Exactly. Well, so especially now that Bernie Walsh is giving up. Yeah, there's not so many around, so yeah, could claim that title. So yes, and do feel free, everyone, to share this and go and follow anyone that you've felt that have been of value. So anyone up here on stage and anyone in the audience, do go and follow them. And yeah, thank you so much, guys. Really appreciate you coming on. Thanks for bearing with me with the tech. I still haven't quite got it right. I'm now trying to outsource it because clearly my abilities are limited, but I think we did reasonably well. But yes, again, thank you so much, and take care, guys, and we'll sure see you very soon. Oh yes, Jason is here. Yeah, take care, guys. Bye-bye.